Welcome to the Weekly Juice Podcast, where we discuss all things real estate, personal finance, investing, entrepreneurship, and the many ways to achieve financial independence. We interview accomplished investors and entrepreneurs with the goal that their stories inspire you to take control of your financial future. Here to get your creative juices flowing, while also documenting their own personal investing journeys, are your hosts, Corey Jacobson and Ryan Bevilacqua.
Welcome back to the Weekly Juice. You have Corey here alone today doing a solo episode. Not a solo episode, I actually have a guest on, but Ryan's not here. So thank you for joining us again today, every Wednesday. This is an exciting episode. We have Amanda Cruz on, and she is an investor who invests now in mobile home parks. That's like her main thing. She has over 100 mobile home park units in the North Carolina area. She lives in Raleigh, and she invests down in her backyard. She started out in the single family game like a lot of people do, right? But she, from the 2017 to like 2018, 2019, I think she left her job in the 2020, 2021 area, but she was able to build up this portfolio that allowed her to leave her corporate job at Capital One. So it's a pretty exciting episode for people that are like kind of in that corporate environment or have a good job, and they're like, is this the thing that I want to do forever? Amanda decided that it wasn't for her. So her goal is to buy $10 million worth of real estate in the next couple years. She's got a wealth of knowledge. She teaches people exactly how to build this mobile home park kind of empire that she's done. And then she also raises money and does syndication. So it's a pretty exciting episode. I had a fun time talking to Amanda today. And without further ado, let's bring her in. Amanda, officially welcome to the Weekly Juice Podcast. I'm excited to have you on. I know we were connecting on social media, and we learned that you had an episode on Bigger Pockets. I listened to that. It was really great stuff. So just want to thank you for coming on. We appreciate you taking the time.
Yeah, Corey, thanks for having me. I'm excited.
Awesome. So if you could maybe just give our listeners a background on who you are, kind of where you're from, and then how real estate investing became kind of this way of life for you.
Yeah, so I grew up pretty traditionally as far as work and thinking about money. My mom retired from a public school system, and I sort of followed the more traditional path to begin with. I'm from North Carolina. I went to North Carolina State University. I got an undergrad in chemistry, which I did absolutely nothing with after college. I moved up to Washington, D.C., and started working for a company doing wargaming analysis for the Navy. I got my master's in applied statistics while I was up there, and then hopped down to Richmond, Virginia, and joined Capital One. And I was there for almost a decade, climbing the ladder, getting promotions, working so hard, and loved it. And I was so challenged, and also just realized I was working so hard for somebody else. And I'd always been interested in running a business and starting a business, and I didn't know if I could do it, but I was interested in it. And I just decided after having my first baby in 2017, hey, let's do it. Let's jump in, even though that's like the worst timing possible, but that's what we did. So we started this business selling gender reveal products like cannons and stuff.
Oh, cool.
And a year into that, realized those products were not safe and we had to shut it all down. And I had always been interested in real estate. So we decided to jump in and learn everything we could about it and go that path. So in 2018, we bought our first duplex, and we've just kind of scaled from there. We always knew we wanted to leave corporate jobs. So real estate was never just hey, we're going to buy some properties and build our wealth over time for us. So we pretty quickly moved from a duplex in kind of some burrs into mobile homes, and then into mobile home parks, which we started doing in 2020.
So let me ask you this. Was there something that was unfulfilling for you about Capital One? Or not, you don't need to bash them. I just mean the corporate America gig. Like, was there something that didn't work out for you, or you were just like ready for a change? I'm curious because we talk to a lot of people who have had this corporate run. Maybe they learn a bunch, but then they realize that, well, they're never going to own Capital One, right? And or any other large business. I mean, I guess it's possible, right? But highly unlikely. And did you realize that it was sort of a time freedom thing? I'm just curious, what was it about that job that you decided, look, I'm not going to do this forever, you know?
There were a few things. So I loved it. And it's a great company. I would recommend it to anybody who's looking to go that path. But I was looking at people who had jobs 2 positions ahead of where I was, even, back in 2017. And I didn't want their jobs. They couldn't go on vacation without taking their Capital One laptop. And they were just kind of tied to it. But their entire lives were supporting somebody else's business. And so no matter how many hours you put in or how hard you work, even if you enjoy it, it's still growing somebody else's business. And I think I just kind of gravitated towards the challenge of doing it myself. And almost like, can I prove to myself that I'm capable of going out into the world and building my own business and making our own money? So it wasn't anything against the corporate world so much as an opportunity to step into a challenge for myself.
Very cool. Yeah, that's very interesting and a good answer. I think we've talked to a number of people. One of our good friends, Brian Lubin, he's a great dude. He's like 28 and he's financially free. And he talks about his run in corporate America and how he just hitting this glass ceiling and looking at the people ahead of him, and kind of everyone's a little bit trapped in their own way because there's this just a culture that doesn't really allow for, like, the person that's ahead of you likely doesn't want you to take their job, right? So they want you to do well, but not so well that they're shit out of luck. You know what I mean? So I just want to throw that out there. I have never worked a corporate job. I don't think I would mesh well in that environment, but just the people that I've talked to, I mean, there's significant benefits from it, but it's not for everyone. So it's cool that you felt the confidence or maybe just hoped that you would eventually feel the confidence to leave and do your own thing.
We kind of leapt first, but we kept our corporate jobs. Both Jonathan, my husband, and I kept our corporate jobs. He kept his for 2 years until he actually got laid off from an IT position. And I was like, well, don't go find another IT job. You can always find one of those, right? And then I left in February of 2022. So we did wait until we had met that financial freedom goal to let go of the,
Totally makes sense. And that's probably the smart way to do it, right? To make sure you have this nest egg. So I kind of want to talk about that and the path from 2017 to 2022 and the buildup of your portfolio. I know you're into mobile home parks now. Obviously, well, maybe it's not so obvious, but I know that you didn't start that way. One of the things I listened to you talk about on Bigger Pockets is like, maybe why not? Why does everyone always feel like they have to start with a single family or a duplex? We can get to there, but I'd like to hear about your specific journey and kind of that 5-year build up to where you felt comfortable enough to leave.
Yeah. So we bought a duplex. We bought it on the MLS. This real estate agent who'd been kind of helping us find some value add or fixer uppers, he saw this one and he went and looked at it and he thought it would be great. So we put an offer in on it, and we were obviously terrified. The inspectors came back and were like, oh, there's all this mold in the crawl space. And as a brand new investor, mold is definitely not a word you want to hear. But we bought it anyways, and we moved forward and we fixed it up and got 2 tenants in there, and that was going fine. Single family houses, which I kind of lump a duplex into the same thing, they don't cash flow that much. So it was making a couple $100s a month, obviously, like after reserves, after all the things. But that wasn't going to get us to leaving our corporate jobs in any sort of time frame that worked for us. So we did a couple of burrs. We gutted another house and didn't really like managing contractors so much, or I guess we didn't do it long enough to really be good at it. And we knew, hey, making $200 or $300 a month per door is just not going to get us where we want to go. So I'd heard of something called a Lonnie deal through an investor who I still love him to this day, Bill Cook. He's very, very smart. He's all about creative deal structuring. And he mentioned Lonnie deals back before we were ever ready to get into them. But I kept it in the back of my mind, and we decided to start that path in 2019. A Lonnie deal is where you buy an individual mobile home from somebody who needs to sell it, just like we do with single family homes. And then you turn around and you sell it to a family who's going to live there, and they pay you a down payment, and then they pay you over time. So you carry the note, you're the bank in that case. the interest rates on those notes are super high. So the returns are really great and it's approachable. You can buy a mobile home for $10,000 or $20,000. So it's just a very approachable investment, not as scary as a whole park, if that's kind of what you're looking for next. So we did a couple of those and got comfortable in the space. We really like the macroeconomics of mobile home parks. It's affordable housing. And so we wanted to go into that space. So in 2019, at the end of 2019, we started looking for our first mobile home park and closed on our first one the first week of April 2020. So we had gone under contract in January and closed in April. And obviously the entire world changed in that time frame. We had our second child during that time frame. So here we are, like 3 weeks into baby number 2. Pandemic, we can't like talk to anybody or go talk to the tenants or anything because you can't speak to anybody in April of 2022. But we closed on it and moved forward and sort of haven't looked back from there. We currently have 4 parks, 113 lots total in the portfolio.
Awesome. Are there specific areas that you target for these parks, or are you able to mobilize and own them in different areas of the country?
So we don't need to go across the country. There are a lot of mobile home parks in the Southeast. All of ours are in North Carolina right now. We've been talking with this one guy in Tennessee for the past month, thinking every day we would have that one under contract. And so kind of Eastern Tennessee, North Carolina, South Carolina, Georgia, that's where we do our scouting.
Got it. Well, I'm curious about the mobile. I mean, we had on, let me see, Heather Blankenship. I'm not sure if you know who she is.
Yeah, RVs.
She talks about RV parks. Robert Leonard, he does more RV parks too, or just RV rentals. I'm trying to think if we've had anybody else that talks. Well, we've had Brandon Turner on, but he didn't talk a lot about mobile home parks in the episode. And he's obviously been doing it for a long time. But I'm curious, maybe if you could break down one of those deals. Like I don't even know what a mobile home park would cash flow. I do know, however, that there's some properties where you own the land and then the tenants own the mobile home park, which seems to me like less maintenance. They're dealing with all the issues of the property. They're paying you a lot fee, and unless there's a massive earthquake, what's going to happen to the land? So do you own properties like that? Maybe just take us through the economics of that and a specific deal that jumps out, or one of yours.
Sure. So just like you were alluding to, there are 2 different ways to own mobile home parks. You have the tenant-owned home approach, where as the owner of the park, you own the land and the infrastructure, the water connections, the sewer connections, maybe it's septic tanks, maybe it's wells, the roads, the electrical, that is all owned by the park. And then the tenants who own their own homes are paying lot rent for the right to keep their home attached to your land and your infrastructure. And you're right, Corey, that is a way more streamlined approach because you don't have to deal with repainting or putting new carpet in. There's a lot less vacancy when they own their own home, of course. Then you have the park-owned home approach, and that is really where the park owns the infrastructure and the homes, and then they're really just like a standard rental. Now, depending on who you are and kind of where we are over time, you may choose more tenant-owned homes or park-owned homes. We prefer tenant-owned homes because, like you said, they're more streamlined. Some people, especially with smaller parks, like park-owned homes because you do get more rent for them. And so it's a little bit of a trade-off. And in fact, our strategy kind of changes depending on how long-term we want to hold. Like we have this one park we're turning around right now that we would have moved them from park-owned to tenant-owned, but I'm not yet sure that we want to keep this park past the next 2 years. And brokers these days are really starting to value based on the net operating income of the park-owned home included, which is not traditionally how mobile home parks are valued. But because of that, if you're going to look to sell a park fairly quickly, then it's worth the short-term headache of those park-owned homes in order to fetch a higher valuation.
Right. It increases the value. It makes total sense. Okay.
Yeah.
I have a number of questions to go off that, but I'm curious if you could break down maybe a specifics of one of the deals that you've done and how the numbers go.
Yeah. So our very first park we bought for $596,000. We put $150,000 $58,000, I think, out of pocket total. And that included the down payment and the turnaround costs. And then 18 months later, we refinanced that at $1 million valuation and took out $250,000 at the time and, kept the park cash flowing. So that essentially, I like to tell people commercial real estate is like Burr on steroids, because you can do the exact same thing that you would do with a single family house. You buy it, you improve it, stabilize it, and then you refinance your money back out and you can keep it. So we've done the same thing with a couple of our mobile home parks, but that's kind of a breakdown of one of them.
What is that park specifically? Like, what would that cash flow? I'm just curious for people that may be interested in getting involved.
So, okay, you're not going to go out and find a 50-lot park for $596,000 anymore, but this was in 2019. So I'll tell you more of the whole story so I can tell you exactly the bigger picture. So we refied it, and as part of that refinance, we actually bought a whole nother park that we got for free, right? Because as part of that refinance, even though we got $250,000 out, part of the other money went towards acquiring this other park that was a couple miles away. So we have this 80-lot portfolio in the same city now. And that portfolio, we pull $7,000 a month from that portfolio. And then on a quarterly basis, we pull about another $4,000 or $5,000.
Wow.
So it ends up being a little over $100,000 a year from that portfolio. In general, mobile home parks are going to have slightly higher cap rates than apartments. So they are going to cash flow a little bit better. Now, I like to think of it as, kind of two different ways. Number one, the cap rates are a little bit higher. So without getting too technical on cap rates and what all that means, is that you are essentially buying income. You're buying a business when you buy any commercial real estate. They're not valued like single family houses. So they're based on a cap rate, which makes you the net operating income divided by cap rate equals asset value. So that being in the denominator, this cap rate, the higher the cap rate, then you get a lower value for that same net operating income. Mobile home parks have higher cap rates than apartment buildings, so you're getting more income for the same purchase price with a mobile home park than you do with an apartment complex. Now, you're trading because you have to work a little bit harder in mobile home parks than you do by just hiring a third-party property manager, so it's a trade-off. I also tend to think in apartment buildings, there can be room for higher forced depreciation because we're taking, let's say, $150 lot rent and moving it to $300 over time. Whereas in an apartment complex, you can take a $600 a month rent and move it to $1,000.
Yep, totally.
And so there's a bit more room there. So this, some differences.
Yeah, I think thank you for bringing that up. And the magic question that I would have if I'm listening and I really want to get involved in this is, well, do you self-manage? Because I imagine that is more so a headache than most experiences in managing properties. I would think. I could be wrong,
Right.
but have you decided to self-manage? What's your take on that?
We have managers at the parks, and then my husband Jonathan does our asset management side, so he manages the managers. Now, keep in mind, this is a part-time manager that is paid, it works out to something like, $15 to $20 an hour. This is not a professional third-party property management company that has their own systems, their own paperwork. So we have to come up with those systems and then teach the manager how to do it. That's a big difference. But no, we don't directly have to manage each tenant, although managing the manager when you have enough units becomes a bit of a job.
Totally, yeah. Well, I'm curious about finding these deals too. You went from the single family game, which I'm not going to say anybody can get involved in, but it's an easier barrier to entry. You have to have, that's how I started, right? It's easier barrier to entry. I'm curious, I know that eventually you got into I don't know if it's syndicating space or just like raising money from other investors. Did you do that originally on your first deal? And then also, how did you find that deal and the investors to go into it?
Yeah. So we syndicated our first deal last year in 2022. So we were using our own funds for the first several years. And, you know, I can see the benefits of going either way. I tend to be one of the more risk averse on that side. So I wanted to make sure we knew what we were doing before we used anybody else's money to do it. And we had the money, right? Because we had the W-2 jobs. So we had money to put into it. And we actually used, for our first mobile home park, we took money out of our retirement accounts as part of the CARES Act in 2020 and used that to buy the first park. So yeah, we do syndicate now. We didn't raise capital for the first several deals.
What do you think the best way is, Amanda, to find investors? I actually have realized this in our journey, and Ryan and my journey, that the money's out there. That's the easy part. The deal is the hard part. But I'm curious if you have specific strategies. Has it been a social media thing? Has it been talking about it? Has it been putting your name out there? This is what we do. People want to say, well, you know, the stock market in 2022 got me negative 20%. So find me another way to put my money, right? I mean, that's just one example. Obviously, over time, the stock market's a great asset for that 8 to 9% or whatever it makes. But what was the strategy that you used to let people trust you with their money?
So I talk a lot about what we do, and I love to teach other people about what we do as well. And so over the past, 5 or however many years we've been doing this, I've grown a decent network from doing that. I've brought people in to invest with us who are from Capital One, and they know me, they trust me, and they know that I can communicate well. And that's a big problem in the syndication space, is sometimes you'll put your money into a syndication and then you are like, hey, I'm not hearing any updates. Is everything going okay? And so it really putting the word out there of what I do consistently over the past several years has, brought people into our network that know I have an established reputation. So I'm not just going to run off with their money, and they trust what I'm doing and they like what I'm doing. So they want to be part of it.
Yeah. Well, I think that's the best way to do it, is to truly establish the relationship. And not only that, to do it yourself so that because every single deal that we've done, we've made mistakes on every one of them, but we've found that the mistakes have gotten smaller in nature because we're like, oh, that's not the one we want to make. Let's not do that again. And then inevitably you get more seasoned. And that's really how you get people to trust you. Is like, I've done this and I have made mistakes, not telling people that you're perfect and that you never make them. I don't think that's the best approach. And so it just from my experience, and we've raised some money into deals. It's been a great journey doing that. But I was very timid at the beginning, like, I don't know, like raising other people's capital. We had never really lost money in a deal, but in real estate, it's pretty forgiving. So I didn't feel like I was an expert, even though I hadn't lost money. Did you have that same kind of
I think
feeling?
everybody who is worth putting your money with has had that same feeling. It's the people that don't ever worry that you should not want to put your money with. But I was working with Coach Trevor McGregor for a while, and we had this conversation too. And if anybody's out there thinking of raising capital and you're kind of going through this same thing, it's like, would you want to put money with yourself? How hard would you work to get somebody's money back if things were going wrong? And if you could honestly say, like, I would do whatever it took, well, that's the kind of person that you would want your friends' money with. You would want your family's money with, versus somebody out there who's more of a cowboy approach that isn't concerned and is like, oh yeah, we'll figure it out as we go. So if you're the one that's having those reservations, you're probably the trustworthy person that should be doing this.
Totally. I want to know about what you think is different about your approach now than when you started. And the reason why I asked the question is, obviously there's a lot of podcasts, there's a lot of people talking, there's a lot of social media out there, even more so in the last 5 years than 2017 or 2018, where there's more access, which is a great thing, but there's also more competition. And in that, obviously there's been a ton of appreciation in the market. It's harder to get involved, but I'm wondering if you take a different approach now moving into 2023, 24, 25. Nobody can predict the future, right? But then you did maybe in the first few years.
Yeah, we were at first just concerned about one deal. and learning what we were doing and learning how to run a commercial asset and understanding the P&L and all that stuff. And now our real approach is on finding value. And we look for a lot of non-residential commercial properties as well. I look for a lot of retail flex spaces. I'm in a mastermind with Ash Patel, who is a really big leader in that space. And so my biggest thing is looking for value add, making sure the cash flow is there. Because, man, even though we keep saying the second half of 2023, there are going to be these deals, and everybody keeps saying that right now, I'm not seeing prices drop. And sellers are still asking for
not so sure about that either. You know, I'm not so sure that that's, I mean, it would be stupid of me to say that I know what's going to happen. So, but I'm not saying that, but I'm not sure. I mean, from what I'm seeing, it's very market specific right now, and
asset specific.
And in Florida and in Texas, I mean, obviously they've come down off of maybe the high, but these markets are still 40, 30, 40, 50% up from March 2020. It's like, so even if they come down, it's like, I don't see this enough inventory to see a negative, a real negative major hit. That's just,
I think it's what you just said, right? There's just less inventory. So there are less buyers, and the capital markets are kind of a mess right now, and the LTVs are changing and they're getting more conservative, which just adds, with the higher interest rates, to how hard it is to make a deal work. And I will say that is the most frustrating thing about real estate investing to me. I don't know if you experience this too, but it's such a mental game. Like, you work so hard, you deal after deal and broker call after broker call, and you're underwriting and you're making offers. And it's like, nothing's working. Why is nothing working? And then finally it hits and you have one that's good, but you have to have all of those weeks and months of effort where it seems like nothing's working. In that meantime, you just have to keep mentally moving forward.
Yeah, our approach, Amanda, has been, okay, where do people want to go to? And that's honestly, like, fundamentally, that's the way we've done it, which is probably different than your approach in mobile home parks, right? Because it's more of a longer term, like, people are living there. But like, we're like, where do people want to go? Are they going to pay a premium to go here? Can we get something that we can improve and then have people come there, whether it's on a long-term, mid-term, or short-term basis? Like, and it doesn't have to be a lot more complicated than that. But I've noticed that finding a long-term rental in the Northeast, which is where we live, I mean, you're going to have to put a ton of work into a property. You're going to have to know what you're doing. You're going to have to know how to flip, essentially, right? As opposed to even in 2019, 2020, when I started, which is not that long ago, you could buy a property and not put any improvements into it and cash flow a little bit, right? So I'm going back to the fundamentals. I'm going back to location. Do people want to be here? Would they be willing to pay for a long weekend? Would they be willing to pay for a week? Would they be willing to pay for a month? Are there hospitals? Are there schools? Are the fundamentals correct? And less about the actual dollar amount that you're going to make. Because I had a property that I bought for $125,000, and I shared this on a couple episodes ago. I just sold it for like $210,000 3 years later. It was cash flowing like $150 a month. One year lost $300 a month. So I'm thinking, well, my return on equity is pretty bad. Let me get out of this C+, C asset where people don't really want to go and try to trade up into a higher asset. Even if I can only cash flow the same amount, I'm probably going to get a bigger return on equity and a higher, maybe not return on equity, but a higher return on the eventual appreciation of it. So it's a lot harder. Like, the short-term rental game is that's gotten harder in the past 3 years. Yeah. So I just find it interesting, the shifting markets, and you kind of figure out who's really in it to win it, as opposed to just trying to, you can't just buy 3 twos in an area anymore. It doesn't really work out that way.
Yeah, and it's kind of tricky. Like, I know it's easy when you're getting in to just think, oh, what is the highest return I can get? And that works for some people, but for us, it's lifestyle and it's risk. So we invest mostly in North Carolina. So in mobile home parks, we'll definitely go into other states, in cities where the populations are growing. You can't really go wrong as long as the population's growing and it's a mobile home park. It's not on a wastewater treatment plant or anything like that. Like, it's a reasonable park. There's just so much need for affordable housing. That's where people are going in general, is to affordable housing or attainable housing. On the retail flex side, I need to have a good market and I need to be in a good location within that market because it matters so much more. And the tenants matter and the leases matter. And there are so many more pieces to really feel comfortable with those assets. Mobile home parks are a lot more forgiving, honestly.
Totally. So we're talking about mobile home parks specifically, and like I'm curious, what is a good deal to you? Because the numbers that you threw out to me, like, after the improvements on a $500-something thousand purchase, you're making $100,000 a year. Like,
everybody would take that deal, right?
Yeah, anybody, right? So, I mean, if I'm doing my math right, 25% return, 25% return. So like,
you don't even have any money in it. So
okay, so it's
like
infinite, right?
Yeah, like it's crazy.
So throw that, not throw that out, but like, congratulations, that's amazing. What does a good deal look like today for you, Amanda? Is it if you can get that, great. What would you recommend if people are like, oh, I want to go into this mobile home park game, it makes sense to me. What's a good deal?
So you don't want wastewater treatment plants. Don't do those. It's too much risk. It's not worth the headache. But let's say you find a park that has, gravel roads, that's fine. Some septic systems and city water. Okay, that's reasonable. You always want to add extra in mobile home parks to the acquisition piece. And you're going to go through this in due diligence and find out how, what needs to be done in the septic systems, and are the mailboxes going to need to be replaced, new signage, new lighting, all the things. Assume it's going to be more than you would put into a single family house. If you were going to buy the same price house, it's going to be more because there's more deferred maintenance. A lot of these owners just haven't put money into these parks in 10 or 20 years. And so once you have all of that figured out, you really need to understand what your return profile is. For us, we're syndicating. So I need to be able to make 15 to 18% conservatively to my investors. So that's the number that I'm underwriting to. Now, if I'm just buying it myself, let's say I want to get into the space and I'm comfortable with a 15% cash on cash return. Well, hey, you can pay more than I can because I need to make money and my investors need to make 18%. So you can pay more for that property and get 15% cash on cash return and double the market and still feel really great about that, and probably go in and add value and force appreciation as well. So it really comes down to what is each person's criteria for returns and headache. How far away do you want to go? Do you want to manage it yourself? Do you want to hire a manager? You have to think about all of those pieces just like you would with a single family house or anything else.
Absolutely. Do you find, are these deals, like, are they on LoopNet? Can you find mobile home parks, or is it really like finding a mentor, getting in the game that way, networking, finding off-market deals with sellers who are willing to be creative? Have you found it both ways?
We have yet to buy a mobile home park from a broker. We've done all of ours off-market, direct to seller. I've spent a lot more time on broker outreach for the non-residential side, and I think that's just I'm making a lot more inroads that way. On the mobile home park side, you just have to be able to pay a really low cap rate and rely on the same low cap rate when you're going to sell, and that doesn't work for me. So I haven't found any that way, but we do a lot of direct to seller. You can find them. One place I would say you can go if you're looking, especially for small parks, is on the residential MLS. So go look for, and you can find listings from the MLS just anywhere you'd go look for single family homes. It just has mobile homes, or it'll have apartment complexes, commercial buildings, everything. As long as it's not on LoopNet or Crexy, there aren't that many people looking at it because nobody's really looking at the MLS for a mobile home park. Now, they tend to be overpriced there, but that's a good place to look for ones that nobody else is looking for.
It's great advice. I'm wondering what your future goals are with your portfolio. I believe you mentioned over 100 units on mobile home park. Do you own any of the single family duplexes anymore? Did you sell them? Do you want to buy any more of those? What does the next 1 to 3 years look like for you and growing your empire here?
I want to acquire $10 million of real estate in the next couple of years. And so that's what we're really working towards right now, is finding the right deals and moving forward and everything we do is value add. So if we want to acquire $10 million, then it'll be worth $15 million in a few years from now.
what I loved about the answer that you just had is that it was ultra specific. You have a number that you're talking about, which I think is important because it's really hard to achieve a goal if you don't even know where you want to be. And that's, another aspect of this whole thing is that it seems like you, through the mentors that you've met and through the connections you've made, you have a very crystal clear criteria. I believe I heard that from Bigger Pockets, but something that is know that you can attain it if you continue to work hard, but it's not like, well, I don't know where I want to be. Have you found that the goal setting aspect, or are there any tips or tricks there that you felt like have helped you grow this thing as fast as you have?
Gosh, it's funny that you say as fast as you have. It's so, like, if I had looked at myself 5 years ago, I would have thought, oh man, she grew it so fast. But when I'm always looking at other bigger investors and I'm like, gosh, we've barely done anything. What are we doing with ourselves? One thing that really kind of changed our perspective was Jason Drees and really just mindset coaching in general. A couple years ago, we listened to this webinar and he likes to say basically, what would your goal be if you knew achieving it were inevitable? Because that allows you to break down hey, but I can't do that. That's too audacious, or there's no way I can achieve that, and just like throw those out and just say, what would I do if I knew I could succeed at it? And that allows you to get excited about what you're doing. Because if I'm buying one single family home this year and next year my goal is to buy 2 or 3, it's like, okay, I know I can do that. That's not that exciting that I'm like so pumped to get out of bed in the morning and really want to work hard for it. So it really becomes like, what is a stretch goal that gets you excited? And who cares if you don't hit it?
Yeah. Well, I've noticed that with myself too. I set a goal this year. I wanted to buy a property in the Tampa market that is going to be, I'm going to use it as a short-term rental, but it was a lifestyle decision for me and my future, and buying in the smallest house in the best neighborhood and maybe adding an addition onto it, or looking to add value at some point, but also just providing a great product where I know people want to go to, and home values are appreciating, and there's new construction going up everywhere. I just know it's a smart long-term investment. And I closed today actually on it. So awesome. It's interesting. It was like one of those things where people think this is like a kind of a facade to write things down and to say it out loud and to speak it into the universe. And this was just a small goal comparative to the people that you're meeting with and talking to, right? Just to buy one really nice property. But I noticed by doing that and speaking it out there, it really becomes significantly more achievable from whatever it is, universal osmosis, I don't know. So my thing from this is like, first of all, I want to get this property to a great place where it's making money every month with furnishings and renovations and upgrades and providing a great quality product in the short-term space. But it really made me think, why did I have a goal so small, right? Like, why can't I do XYZ that's so much higher? I have to figure out what that is that I want to do, but I'm fully confident. I think I'd like you to speak to that, just the confidence that you create in yourself by kind of like keeping the promises to yourself and doing the things that you need to do. Once you achieve those goals, then it becomes a lot easier to like, oh, I can do this so much bigger. And have you found that in your own life?
Oh yeah. When we were going to close on our first mobile home park, and I didn't mention this, I should have, we were terrified. We were absolutely terrified. I ran the numbers 50 times because people were losing their jobs left and right. It was 2020. I mean, we could go bankrupt. I'm like, all right, but we're in our early 30s. What is the worst thing that can possibly happen? We go bankrupt. We go through all of our savings. It's like all these things. It's like, okay, that's unlikely. We only needed 50% of the people to pay to make our mortgage. So, okay, it's unlikely that would happen. But, those are the scenarios that you have to run. And then once you do it and it turns out really well, then you can do it again. And there are things that scare us. Like, one of my friends called me the other day. He's a big developer. And he was like, hey, I'm looking at this property. It has 200 something mobile homes on it. And there's also some vacant land. How much are the mobile homes worth? So like we chatted for 5 minutes. I was like, okay, let's see 17 million. And he was like, all right, well, I can do this part. I'm like, all right, go for it. He's like, all right, well, if we get it, then I'm definitely going to pull y'all in so you can run the 250 mobile home parks. I'm like, well, that's a bigger one than our entire portfolio. It's like, well, that's kind of scary, but it would also be really exciting. So just kind of, I know we could do it because we've done it before. And we surround ourselves with people, like even in the commercial space where I don't own a retail building right now. That's why I'm in a mastermind with people who have done it over and over and over again, that I can pick up the phone and have one phone call and say, tell me what to do. I'm faced with this decision. So I think it's doing it and then surrounding yourself by people who know what they're doing.
Love it. And it's also part of it for me, I feel like it's like, if you're not scared, it's probably not worth doing. Then you just have to do it anyway. Obviously it has to be smart financial decisions, all the numbers, but like the whole pushing through the fear thing for me has been like, oh, I really feel confident enough in any scenario that I'm going to be able to figure it out. So I want to throw that caveat in there, but I think that mindset, it's kind of like, it's not concrete, so people can't get behind that idea, but I truly believe that putting your message out there and following through and making tough decisions and pushing through the fear really propels you to the next level. So
definitely,
as we wind down the show, I kind of want to get to know you a little bit more personally. We have a section called the Core Four. We'll ask you questions maybe about not about your personal life, but more of that mindset stuff. And my first one is what is your favorite business or real estate investing or mindset book, whatever comes to mind, that has helped you along your journey?
You know what I loved is Ken McElroy's ABCs of Real Estate Investing. It's essentially doing a flip, but it's walking through a flip of a big apartment complex. And for anybody who's in residential and thinking of growing or expanding into multifamily, it's a really great book on just breaking it down. It's the same process, just with bigger numbers.
Love it. Cool. So question 2 is, let's say that I was feeling really generous today and I give you $100,000 tax-free. You probably have a different answer now than you might in 2017. What would you do with that money and why?
I would put it towards another value add property to keep, forcing appreciation and keep growing our net worth.
Cool. And now that I asked this question, when you syndicate, we have a way that we approach investors. Do you take accredited, non-accredited? Does it depend on the deal? Like, how does that work? It just sparked that thought to me. Like, can somebody invest $50,000 in a deal? Can somebody invest 25? Can somebody? Normally, they're 50 or 100 are kind of the starting points. I'm just curious if people are listening and they want to be more on the passive side.
Yeah, so we've done 50 as our minimum, and we do allow non-accredited investors, but it is important to have a relationship with those individuals.
Yep, exactly.
First. So we would definitely need to start a relationship.
Yep, yeah, we found that too. I mean, obviously it's SEC regulations and all that. I'm just saying, like, it's cool to really be able to help out people that you're friends and family with, yes, and that have watched you grow. I find that the most rewarding, to give them a return on their investment, and then it's personal. So very cool. Yeah. Amanda, what is has been your biggest mistake in your real estate investing journey, and how have you learned from it?
Okay. Well, the first syndication I ever put my money into passively, I lost all of it. It was like $80,000. This was, so that was a pretty big mistake. It was 5 years ago so we didn't know anything about syndications. We weren't raising money. We were just, buying a duplex. And I knew another investor who was putting his money into this syndication. And so I chatted with the guys, but I didn't know them. I didn't know if I should trust them. And it turns out I should not have trusted them. And instead, when things got tough, instead of coming to the investors and telling them what was happening, they just completely abandoned it. And we had to chase them down to even get any information. And then they ended up just washing their hands of it. And we're basically like, yeah, well, too bad. It is a risk when you invest. So
I'm curious about this. Were these people, were they scam artists, or are they just people that got into the wrong situation, didn't know what to do, and then were like, shit, I can't return the money? Like, what,
Yeah, they're not scam artists. I think they are incredibly opportunistic and, like we talked about earlier, not cautious. at all. And so they were acting like cowboys, and this was a very different thing for them than they had done before. And it just didn't go well. And there were problems throughout the entire process. And then our distribution stopped, communication stopped. And then, what's the worst part is after they lost all of our money, like 6 months later, they started emailing me and other investors in it. They were starting to wholesale properties in Detroit, and they wanted us to buy properties from them. Like, you just lost 80 grand of my money. I don't want to put any more money with you ever.
This reminds me of a quote I was read from just something on Instagram from Alex Hormozy, and he said, "You can always start another business, but you can't start another reputation." And I think it was like the other day he posted it. And I will lose $50,000 of my own money like it's nothing, and I haven't, thank God. But I would not care if I did, if it meant compared to losing some 50 grand of somebody else's. So the fact that they have the conscience to be able to do that maybe is even, you can read into it from there. That's wild.
And you can compare that to other syndicators who, now that I know several of them, have great reputations. I know one who lost $1 million of people's money and then spent the next several years paying it back with 14% interest, because that's how you grow a reputation.
Yep. And that's and it really just comes down to people. And can you trust yourself? Can you trust others? Are you a good person or not? And business, life, it's all about that. And right. So, which kind of leads me to my next question, which is a little bit more philosophical. I'm curious, what do you want your legacy to be? And I don't mean like, some queen of an empire, unless that's what your goals are. What gets you up out of bed every morning? And this is what you're doing is difficult. So why, I guess, what is your why?
So in general, like, I want people to have a better life because I was in this world. And on a small scale right now, telling people what I do with real estate, it is helpful. One day I really want to teach people who are underprivileged but really hardworking and don't know that you can make a lot of money with real estate. Like, I'd really love to reach that group more impactfully. I love to donate. We donate food. I'd love to do that on a bigger scale. The more money we have, the more impact we can make in the world. Even donating diapers. Like, we donate diapers right now to moms in need, but we can do that on such a bigger scale the more money you have. So ultimately, just making people in our community have a better life because we were able to build a strong business.
Great answer. I love that. So the last drop is the last question of our show. And knowing what you know now, Amanda, what advice would maybe you give your 15, 16, 17-year-old self if you could go back and talk to her? And I always caveat this with, I'm not suggesting that she would listen to you, but if she would, what advice would you give her?
Yeah, good caveat. Yeah. So I was focused on having fun and partying, and that's fine. Everybody needs to have some fun, but I love business. I love real estate, and I would have loved it when I was in my early 20s. Like, look at you and how much you've accomplished. Like, I didn't even start until I was in my 30s. So I wish I could go back and be like, hey, dumbass, like, who cares about going out tonight? Like, you would have so much more fun going and making a bunch of money flipping a property or learning about commercial real estate, and actually doing something useful rather than just like going out to a bar or going out to happy hour or whatever it was.
Yeah, it's a good answer, I think, but maybe you needed what you did in order to get to a point where you learned that you wanted to do something different. And it's funny because having that conversation with yourself, I always say, like, I was looking at Instagram today and like nobody really has it figured out. Nobody. And that doesn't mean that there aren't people that are highly successful and they're making a lot of money and living a great life. But I've talked to multi-millionaires who are like, we're still like trying to figure this whole thing out. So a lot of people answer with kind of get started earlier, which I think is a great answer. But for me, I always thought like, well, I needed that time period to figure out my life and meet the right people in order to know that Well, I didn't want to do that. Like, I didn't want to work in insurance because that was my first job out of school, and it was brutal. I hated it. But if I hadn't done that, I wouldn't have been able to check it off the boxes to know that that's not what I wanted to do. So, good answer. But Amanda, it's been a pleasure to get to know you, to learn more about your story, to climb, to watch from social media, of course, to see you climb to 100+ units. I want to thank you for coming on and sharing your story with us. If people want to learn more about you, they want to listen to, follow your journey, network, what's the best way for people to get in touch with you?
Yeah, so thank you for having me, Corey. This has been great. And you can check out my website, voyageinvesting.com. You can join our investor circle through that, which is how you would get updated on any passive opportunities that we have. And, you can follow me on LinkedIn, Amanda Cruz, and on Instagram at Investing with Amanda.
Love it. Thanks so much, Amanda. We appreciate your time.
Yeah, thanks, Corey.
Thanks for tuning in this week to the Weekly Juice Podcast. If you liked what you heard, please leave us a 5-star review on Apple Podcasts, subscribe, and share with friends. The more ratings we get, the more ears we'll get on our show, and in turn, we'll be able to provide you with more high-quality guests. You can also find us on Instagram at Weekly Juice Pod, where we post daily tips and tricks and document our own journey towards financial freedom. Make sure to tune in every Wednesday to get your weekly juice.